Here's your sign. Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of December 17th, 2018. And I say here's your sign, kind of a harken back to the comedian Bill Engvall, and that was kind of his tagline. And I don't mean to imply that you're doing anything stupid or anything. It's just a funny line. As you know, people are looking for evidence, and what's going to happen in the market next. And people would maybe say, "Yeah, give me a sign." Well, here's your sign, and there's several of them. We got several bearish indications here using technical analysis. I'm showing the S&P 500, and first we can just look at very simple Dow theory, and we've got from the all-time high of the market, a pretty significant low that was made in October. That was pretty dramatic. And then a lower high, and then we had a little choppiness, but we've gone on now to a new low. We just went below that prior low there, and we had been trading since that low in October in a bit of a wide swinging channel, and we just broke out of it. Now, we broke out earlier in the week. We had a wick down below it, but Friday we had a close below that low, so I think that's meaningful. So here's one sign for you, right? Dow theory: lower low, lower high, new low. And that certainly has some meaning in technical analysis. The other thing is, this isn't something, a formation that I used too much in my trading, but it's been pointed out. We did have this death cross I talked about. Here's the 200-day moving average. 50 crossed under it, and it is continuing down. So there's another sign, the death cross. And then yet another. Here's a lot of people look at this head and shoulders, and we got kind of a shoulder here, right, and then a pullback, and then a head here, and then a shoulder maybe there. This isn't a perfect head and shoulders formation, but there may be one on a little bit shorter time frame. Again, this isn't my big deal formation, but it's been pointed out. So there's kind of a head and shoulders, and then down there. So we've got potentially that. We've got negative momentum here. Price is clearly down below the 200-day moving average. The Ichimoku cloud is negative and expanding. So just about any kind of technical analysis you would do would indicate, hey, we're in a downtrend. Now, we could definitely see a move up, and maybe Santa will show up with a little rally toward the end of the year. We got about 2 weeks left in December. But even if we get some up bars and it comes up even to the bottom of this Ichimoku cloud, that does not indicate a trend change to the upside. Lots of, I don't think that's happening. There's a lot of analysts out there saying, oh, value this, bargain that, snap it up and buy it on the lows. There are individual stocks that have bullish patterns, and I'm actually trading a few of those. But the overall market and the S&P 500 here, that's down, right? And I think we're going for more lows, even if we do put in some short-term highs. And I think there's a chance that we may have started a bigger move down. And look here on the weekly. Oops, we're already on daily. Look here on the weekly chart. We got a pretty good low, lower high, new low. I pointed that out on a smaller time frame. The 200-day moving average is clear down here at 23.45. The retracement zone, just using normal market cycle theory, is a Fibonacci retracement between 38.2 and 61.8. That takes us down under 2,200 and even as low as in the 17s. And that would not be a catastrophe. That would just be normal market cycles and a normal correction, in an ongoing way that the market behaves. So as this started, it kind of looks like it. It kind of does look like it. Now again, we may, it's not going to go straight down. It'll be lower lows, lows, lower highs, lower lows, lower highs, lower lows. But I think there's a pretty good chance this has started. So it'll be interesting. And again, even if we get a little pull up here toward the end of December, that's not going to convince me unless something much bigger and more dramatic happens, and we would have to clear up through the Ichimoku cloud, get above the high 2700s on the S&P 500 for me to be convinced that this is over and we're going on to new highs, and I don't see that happening. Let's take a look at gold and oil. Pretty interesting what's going on here. I think gold is interesting. We're long one gold mining stock, and look at it another. And after the big decline, we've had a nice period of higher low, new high, pulling back a little bit. I think this is a buy area, and I think we're looking for more highs to come in gold. So bullish on that. Oil is interesting. Crude oil futures on a daily chart. Of course, you may have noticed that the price of oil dropped dramatically from 76 down to under 50. It's in a pretty good consolidation now. And if it can break out of this, we may have a pretty good correction up to the low 60s coming. That's not proven yet, but that's worth watching. So if that happens, if we break out, up into the mid 50s, then there may be a bigger move coming, and we'll definitely try to capitalize on that. So that's the update for this week. Pretty interesting. All kinds of news could break. Who knows what's going to happen with, Brexit and President's standoff with Congress and the new Congress and border walls and shutdowns and all kinds of news, that could break. Coming up this week, Fed meeting, and they'll be talking about interest rates. That'll be a big deal. Everybody will be watching the Fed. So that's probably the big deal for this week. The big planned event is the Fed, the Open Market Committee meeting, and their discussion about, the planned December rate hikes and then their view for the future. So that's what's planned. And then, of course, other news can break at any time, and we'll just be ready, and we'll follow a disciplined approach to responding and trading. All right, take care. Keep your winners big, your losers small. Trade safe. We'll catch you on the next update. Thanks. Bye.